Welcome to this afternoon's webinar. For those of you that don't know me, I am Sarah Corley. I'm DFI's Community Manager, and it's my privilege to put on a series of webinars for you all. I'm really happy that one of DFI's founders and an incredibly talented and knowledgeable man joins me for this afternoon's webinar. I've got David Porteous with me today. David's going to talk you through a presentation that he's put together for you. Any questions you might have that you want to ask to David, please pop in the Q&A function, which if you scroll your mouse towards the bottom of the screen, you'll see it pops up. If you can put in the Q&A rather than the chat, that makes it a little bit easier for me to manage and make sure we get round to asking your questions. You can put questions in as soon as you have one, or you can wait towards David's finished his presentation. It's up to you. But we'd love to hear your questions and we will make time for the Q&A. We're also recording today's session, so we will be able to share a recording with you tomorrow in case you accidentally drop off or in case you want to share with any interested colleagues. So thank you very much for joining us this afternoon. I'm now going to pass you over to David.
Sarah, thank you. And good morning or good afternoon or even, I guess, good evening to those of you on the line. It's nice to have the chance to join you at this time. And I'm speaking to you as I normally do from my home. Well, I don't normally speak to you from my home. I guess that's different, but from Boston, Massachusetts, where, like I assume most of you, we remain in a state of lockdown, lockdown that restricts us not just to home, but certainly no essential businesses going on, and most people working from home. So a very different world. Fortunately, a world that's not experiencing what New York City has experienced close to us so far, although even that is showing signs of changing. And of course, things are changing so fast, and that's really the context of what I discussed with Sarah about sharing with you today, because the original purpose of this webinar was to talk to you about some of the work that I've been involved in over the last 6 to 12 months, thinking about digital work platforms and how those are changing things in some of the countries we see around the world. And that work continues, and believe me, my interest in that continues, and maybe we could talk about that another time. But it felt like at this time, at least, it was more relevant to share with you some very recent work that we've been doing through the consulting firm that I'm involved with, that's BFA Global, looking at building scenarios for how particular countries, particular places, particular clients respond to the COVID-19 crisis. So what I'm going to share with you is kind of an abbreviated preview. That's why it says draft, not for quotation, of work that we've just completed in Mexico for a client there, using scenario thinking, which I hope can nonetheless be relevant, even though Mexico is the focus, as you'll see, and that's not a world I'm assuming that most of you on this call are from. It'll give you a glimpse into a different experience in an emerging market like Mexico, and I hope tease out some more general things which could be of interest to you in your countries and markets. So, for about 30 minutes or so, what I'd like to talk you through is these emerging scenarios. But to get there, let me quickly summarize what I mean by scenarios, because I don't mean forecasts of what's likely to happen. Instead, what we've been doing is applying scenario logic, which for those of you who've been involved in scenario building exercises are all about building plausible stories. It's about creating different worlds, different canvases, so you can consider how robust your strategies really are, because things don't always turn out in the ways that you hope or expect. And certainly in this fast-moving setting of COVID-19, there's a whole lot of noise out there. There's an overwhelming amount of information, at least that's my experience so far. And so part of a scenario building exercise is trying to filter that through, trying to set up systems of indicators about saying, what should you be looking for? And then stress testing what you should be doing. And in all scenario exercises, the particular thrust is looking for non-obvious and non-trivial implications. And so this is just an example of one that caught my attention early on. So we all know that in times of crisis, things like toilet paper run out. That's obvious. It may be relatively trivial depending on where you sit on the shortage. But here is something that came up, in fact, a month ago in this country, which is the implications of people running out of toilet paper is using other things And that was causing problems on a systemic basis in some cities with sewage systems and toilets. So relatively trivial, but perhaps non-obvious. Now, with a scenario building exercise, it's not simply a ramble into what does the future look like. That's far too vague and general. And so it requires a focal point. It requires a driving question. And I need to be clear with you up front what the driving question of this particular exercise was. It was done for a particular project that BFA manages in Mexico. And the question was this: how can the partners of that project, and the partners there were cooperative financial institutions, relatively sizable ones, as you will hear and see, the donor involved, and then wider stakeholders in that country, which include the financial regulators, which have an interest in the financial health of those institutions and indeed of their end clients. So it's about how can that group of partners respond to the pandemic in such a way as it improves the financial health of their clients through the end of this year. So we're looking beyond the immediate crisis phase to what lies beyond that in the time frame. So that was the kind of question that we set out with a team of people in Mexico and some outside to address. And again, what I'm going to share with you is a kind of preview, and I'm going to preview, first of all, just the three main messages which emerged from the exercise, and then I'll step you through at least one of them in a bit more detail. So the first message was that most people around the world have been hoping for a bounce back, what we call a bounce back scenario, or a V-shaped recovery, which means that things start to resume as normal later this year. However, it's very likely, certainly in Mexico, that many factors make that unlikely and make a slower, what we called a limp back scenario, where things only get back to the same levels of overall economic activity by 2023. Or perhaps even worse, what we call a fallback scenario, which I can talk about. And so really that message is about saying to these partners, in your contingency planning, don't assume only the bounce back. Don't rule that out, but think about these other timeframes as well. And then the other messages, just so you know them, because we may not have a lot of time to go there and they're quite specific. But as we went through the thinking about who's most affected, as you know, the COVID crisis is highly differentiating. It's having highly differentiating effects on countries, but beneath the national level on regions, on cities even, as New York City in this country has seen. And as we looked at this, we felt that the most vulnerable segment in Mexico may well be its third quartile, meaning those people who are not formally employed and middle class or above, that's the first and second quartiles, and also not the poorest, that's the fourth quartile, because those fourth quartile people in Mexico at least are subject to getting government transfers, welfare transfers, G2P payments. So in this third quartile, people largely pursuing informal economic activities, so off the radar for government support and stimulus schemes, very vulnerable because those activities have been cut into, and yet, this is the important point, we think that that quartile 3 in Mexico at least is the engine room of an inclusive economic recovery. So again, to be clear, the word there is inclusive. If this quartile were not able to restart the activities of their small businesses, their contracting operations and so on, the recovery, when it comes, whatever time frame, would be much less inclusive, much more concentrated in the hands of, say, formal businesses. And these people in quartile 3 would end up slipping effectively to the living standards of quartile 4 people in Mexico. And then finally, just the overview of what emerged, because this is ultimately the reason you do scenarios, is to consolidate key messaging. We looked at these cooperative financial institutions who are the partners there, and it turns out, in fact, that their client base is actually very similar to Q3 type people. And so, in fact, if you are concerned about the financial health of Q3 type people and their role in economic growth, then the role of co-ops is even more important than before, because it's co-ops that reach them with their businesses. And as we look further into the nature of co-ops, where, as you know, they are member-owned and governed institutions, there are many quirks that go with that. Countries have very differential experiences of cooperatives, some quite troubled, others quite effective. But it does feel like, in a situation where governance is being challenged, financial cooperatives where the borrowers are also the lenders, also the savers, have some opportunities to reset things in ways that might make them more resilient than, for example, certain types of banks, where there isn't the same sense of membership or ownership, and therefore not the same ability, not the same governance structures to reset. So that's the main messages, but the one I'd like to just spend the most time on, because it's more relevant to people outside Mexico, like I'm assuming most of you. If there is someone from inside Mexico, then I'd love to hear your response in particular. But let's focus particularly on the macro scenarios that we were building for this recovery phase beyond the immediate crisis in Mexico. So we started by looking, of course, at the current reality where Mexico starts from, recognizing how differentiated the experience is. And these are just a few indicators comparing Mexico with China, the first country into the COVID crisis and potentially the first out. And then with the USA, largely because it's Mexico's neighbor, it's probably the place from where some of, if not many, of Mexico's infections have come, and also it's its largest trading partner, so with a big impact on the Mexican economy. So as you can see there, Mexico went into the crisis with pretty weak financial situation, growth already slowing before the crisis, and even though its borrowing levels well below, say, the US's, well above China's, but very constrained, a debt downgrade. So a government without a lot of headroom to do fiscal stimulus, for example. In terms of thinking about the ability of pushing a digital transition, well, pretty obviously there, Mexico relative to these two countries ranks far lower. And in particular, that digital payment percentage, a third of Mexicans, lower than its peer group. And that's playing out in ways we can talk about in the crisis. And then finally, in terms of things like informality and the reach of safety nets and so on, Mexico has a high degree of informality. It's particularly concentrated in the activities of that Q3 group, which is as much as 30% of Mexicans today. But it extends throughout the economy, and that affects the ability of governments, states, to respond to it. So Mexico starts at a different point than, say, China. As we built the scenarios, what we recognized was that there are really four interdependent layers of uncertainties in this crisis. So you can call it an uncertainty stack. And what makes it complicated is they're interdependent. And as you see these layers here, you'll see why. So there's clearly a health layer, which is about the, if you like, the epidemiology of the disease. So how soon infections peak, when a vaccine might come, things like that in that layer. Then for the economics of it, the restrictions layer matters, which is now about the decisions government take in response to restrict economic activity. So how severely and for how long life is restricted. Then, of course, governments are trying a stimulus layer, and this uncertainty here is about the size, the speed, and how effectively stimulus is delivered, which is an attempt to counteract the effect of the restrictions. And then finally, the fourth layer of the stack turned out, we felt in Mexico, to be the most important one, actually. And that we called social cohesion. And that's a shorthand way of saying quite a lot of things, but really it's about saying the dynamics of this crisis are driven not so much by what government says in terms of restrictions at layer 2, but more about how people respond to it. For example, whether people trust government and whether they support its measures. That's on the public side, but then there's a private side, which is the degree of voluntarism and the extent to which civil society, corporations, large and small, for example, step into a response mode independent of what government is requiring them to do. And so that's bucketed under what we called social cohesion. Now, in each of these layers, we've assembled indicators that track Mexico's response over time, and I'll give you a little peek into a few of them. Obviously today, in the context of this webinar, there's no time to do more than a peek, but I'd like to just show you a couple that give you a sense. Let me just illustrate the health layer, just to give you a sense of what we mean by the uncertainties there. So it could be that the epidemiology means that the the morbidity, the percentage of people who die, looks something like this in Mexico, where there's a peak reached in a relatively short period of time, and then it phases out. It could be, as the result of measures taken, that that peak is flattened. This flattening the curve is something that people are talking about, and Mexico is sort of happening, as you will hear more. There could, however, be this situation where the waves of the pandemic recur. And as you probably all know, if you're reading the news, this is what happened with the Spanish flu 100 years ago, where in fact the second wave was far more lethal than the first wave. And there were in fact 3 waves over a period of 2 years. So those factors, which are largely exogenous, although may be affected by restrictions, are going to be very key in driving other things, but they're not the only things. To give you a sense of where Mexico is placed right now, this is looking at, it's in Spanish here, you can see, but confirmed deaths as the result of COVID-19. And you can see the number of days from the first confirmed death. And so essentially, this is the trajectory of the health pandemic. And there is Mexico, kind of in the middle of the pack right now, accelerating faster than, say, India, but slower than the trajectory the US or Spain or Italy have been on so far. But as you know, those shapes can change. And so Mexico, the point simply is to say, very much looking more like the European experience right now than some of these other countries where so far, at least, the death rate has not been as compelling. So in Mexico, the health situation matters. There's not a speculation about whether or not there will be deaths. There are already, as you can see, 500, 600, at least when this chart came out, I think last week. Let's just go to look at one more of the uncertainty layers. Each of them we could talk about: restrictions, we could talk about stimulus, but we've said already Mexico's ability to do stimulus at the national government level is very constrained. Mexico is a petro state, and the fact that the oil price is hitting 20-year lows is bad news for the Mexican government, which owns the large oil company in Mexico. But those things apart, I already made the case that the social cohesion layer really matters. And the question is, how do you unpack that just a bit more to get a sense of what's under the hood? Because I would love to hear from some of you in other countries, how you're seeing this play out in your countries, and whether you think it's as important as I am arguing it is, at least in the case of Mexico. So we could look at cohesion at an international level. For example, how substantial will these multilateral aid efforts be? We've heard the G20 announce debt forgiveness. Okay, that's perhaps helpful. Is it sufficient? If there is not international cohesion, there won't be big new packages of funding, which countries like Mexico can easily draw on. There's a national level issue about compliance, about belief in the credibility of future government actions, and that applies at national level and state level, as we'll see in Mexico. State governments are important actors in a federal type situation. And then the civil society questions, we're asking questions like these and seeking to kind of map the response. So how does cohesion affect the economic growth outcome? So if you look at this curve of the change in GDP, and what you see there is, as the result of restrictions, most countries, including Mexico, face a sharp downturn. That's the black line. Stimulus, in theory, reduces the severity of that downturn, although Mexico, as you've already heard, doesn't have a lot of scope to do that. What we argue is that what cohesion does is the lack of cohesion potentially pushes the post-stimulus picture back down again. It makes it worse, or at least extends the duration. Whereas to the extent there's greater cohesion, you could perhaps flatten this economic severity curve or reduce its outcome. So that's how it manifests in the economic world. The question we faced in Mexico is, how do you track that? So because of its importance, just a little taste of that, not because I expect you to have as much interest in Mexico, but we've been looking at polls. For example, there are a series of polls. You can see one on the screen here, which asks, in your opinion, is the federal government, or does the federal government have the situation under control relating to COVID? And the big purple figure here is the proportion of people who think it does. So you can see over a month until last week, more than half of Mexicans don't think the federal government has it under control. Only a third do. And there are a whole lot of other questions being asked, and we've now picked this up in the tracking surveys that BFA is doing among low and moderate income people, including in Mexico, asking about, are you experiencing people complying? Are you experiencing forms of social breakdown, which an extreme would be things like food riots and so on going on? And we've been looking in Mexico, tracking popularity polls of leaders. So this one over here on the left is the president's popularity poll, AMLO, as he's called popularly. The green was his approval rating, the red, the disapproval rating. And you can see, even though the trend was downwards before the crisis, it's in the form of the crisis, there's been a sharp deceleration to where his approval from 2/3 approval a year ago has now become net disapproval. And a whole lot of other indicators being tracked in terms of people's expectations about the crisis. And I can't stress that enough, because it's through expectations that business people have about the risk of restarting, about whether to invest in taking staff back on, that the economic effects will play out most strongly. So what we have then, here are those 4 layers that you've heard about. And what we did was to cluster to get to the 3 core macro scenarios, to cluster the assumptions into forms that we could follow. So the bounce back scenario, just to talk through what that means, is a relatively short health crisis. That was the one picture you saw, with relatively strict restrictions imposed relatively fast that helps reduce the crisis. That's the feedback effect between those layers, with a relatively strong stimulus effect to ameliorate the strictness of the restrictions, and with quite a lot of cohesion, meaning that those measures are credible, they're trusted, people act as if they believe them. That's different from what we called a limp back scenario, where it just takes longer. The health situation takes longer. The restrictions may still be strict, but the ability to do stimulus to counteract them is less, and where the social cohesion effect may be mixed. And we contrast that with what we called a fallback scenario. It would be easy to call this a worst case, but the aim was not to put together a worst case view. Scenarios are not about saying, let's do medium, high, low. Even though this can look like that, it's about clustering credible pictures and then looking hard at them to see the assumptions under which they might apply. So in the fallback case, you can see the epidemiology may be worse, it may go on. There may not be a lot of stimulus. And in particular, I would star the social cohesion element, which is weak social cohesion, which means that the government response is not credible or believed. And so people start to take things into their own hands. They always do that. People are not passive in response to crises like this. And we've started a similar exercise in Kenya, actually, in the last week we could talk about, but it's premised around saying those people in that quartile 3, or the equivalent in Kenya, they don't just sit and watch a crisis happen. They've survived by hustling in the informal sector, working extremely hard. They don't just sit and watch it, they respond. And how they respond and who they trust in that response will have a big influence on the outcome. So just to summarize then, what does that translate through to GDP measures? So the bounce back would look like that, a sharp decline in quarter-on-quarter GDP. In Mexico's case, could hit as low as a 10% decline. Economists are projecting, this is a projection, not our scenario, but projecting an overall decline of GDP that could be as high as 5%. That's really unprecedented in these times in Mexico, but starts to head back to normal within a year. The limp back takes longer. And so resumption back to the previous high-level economic case by 2023, and then the fallback case where it's just a whole lot more jagged and the path back takes longer. Now, just to say, as of April 2020, we're monitoring indicators in China. We have someone doing that for us, and we have surveys, in fact, going on as we speak that'll be available probably starting next week about contractors and gig workers in China. How they are resuming work as China's strict quarantines have been lifted, even in the worst affected provinces. And so China is the country that shows the most signs of bouncing back, but it bounces back from a strong fiscal position, strong stimulus that's been administered, strong restrictions, which contained, at least it seems so far, their situation on the health front to looking more like the bounce back situation. So the real point of all of this is simply to say, in the case of Mexico, you can hope to have a bounce back, but don't count on it. And so the point about contingency planning in the light of scenarios is to say, you need to have a response which looks at a world which might look more like a limp back world. And what would you do if you're a Mexican co-op living in that world? What would you do if you're a Mexican bank or financial institution? So that's the first message that I've stepped you through in a bit more detail. The second and third messages, I guess we don't have a lot of time to talk about. They just spotlight the argument as to why that Q3, there it is, 30% of people in Mexico in the income pyramid, why they're particularly vulnerable in this crisis, even more than the Q4 guys who get government-to-person transfers, which are quite widespread in Mexico, and also why they're an engine room of recovery. This is also, by the way, the group in China that's been most vulnerable. And even under a bounce back at a macro level in China, the numbers of small business failure don't look good at all. It's not at all the case of simply turn off the engine and then switch it back on as if nothing happens. So just to be clear, even a bounce back is not simply going back to the way things were before. It's not that in China. It certainly wouldn't be that in Mexico. So we could discuss that more if you like. Let me just briefly go into the third message, which is about cooperatives, which is just an angle I want to tease out a little bit more. This is just a bit of background. The cooperative sector in Mexico is fairly large, so 7 million people, asset base of some $7 billion roughly. But with a deposit insurance fund, they do have deposit insurance for co-ops, but it's $400 million. And so were the co-op sector to come under severe pressure, there is no way that the deposit insurance funds could cover the savings of members. And that's why one of the things that interests us about cooperatives, who, by the way, are under extreme pressure. So this is actually an actual scenario for a Mexican cooperative of cash flow, based on the experience they were starting to see at the end of March in terms of non-payment, under loan moratoriums, under clients who've lost income, withdrawals of savings, which are happening. This particular co-op expected that it could survive a month, maybe 6 weeks, without running out of liquidity. In other words, the clock is ticking now, and unless things change, this co-op would not be around in May. It would have to close its doors unless it received an injection of liquidity. Now, things are changing fast. The Mexican Central Bank has just announced a big liquidity measure. It's not a fiscal stimulus, it's a liquidity measure, and we have to look through and revise what that means for the cooperative sector as we speak. But again, under any scenario, as we think about what this means for the cooperative sector, there will be failures. There will be consolidation. And in some ways, the macro scenarios simply cause us to think about how deep that restructuring will be in order for cooperative institutions to survive. Couple of last things I'd want to pull out. What we did in Mexico was to then take those three macro scenarios that you saw, bounce back, limp back, fall back, and said, okay, now donors in Mexico and liquidity providers like the central bank, that's really them there, donors there have choices. And based on their choices, the particular strategies for co-ops could look different. And I'm not going to talk you through those three derivative worlds for cooperatives because they're more specific to Mexico and Mexico's cooperatives. But just to say, it's in those worlds with different numbers of cooperatives, different experiences of digitization, inclusion, and financial health that you can start to get to some answers to that driving question that you saw up front for cooperatives, for policymakers like central banks and financial regulators in Mexico, and for donors. Let me just surface as we end here this presentation and go to your questions, a few of the things that I personally want to reflect on arising from this Mexican exercise. So I've already made the case that this Q3 group in Mexico, but I would argue actually in other countries, is not only especially vulnerable in the crisis, but is especially important. And so the question becomes, what can you best do to support that group? And that's where, frankly, for me, it's been a surprise as someone who has never actually closely worked with cooperatives and in the past even had a slightly skeptical view because of their governance that made them kind of clunky in some of the situations that I experienced in certain countries in Africa, for example. But as I've seen not only the correspondence of the client base with this Q3 group with cooperatives, where Mexican banks typically don't go there in terms of lending to businesses in that informal group still today. Not only is that point important, but also thinking about how they are different in their governance. The fact that the borrowers are also savers. And so there are opportunities to broker resets where you could, for example, even think about forms of translation of debt, restructuring of debt that could happen without the need for a regulator to step in and to force that, which you might need in the case of large banks, where the governance of dealing with a restructuring is a whole lot more complicated and requires external intervention by authorities that have powers. So, if one of the things that the COVID crisis does is it shakes up authority structures, it's certainly doing that in Mexico. This question of cohesion is a question that co-ops will have to ask. Are their members willing to be cohesive in the face of the crisis? And some of the very interesting thing that we're starting to see in Mexico is how even as the federal government, the response has been weak. And as you see, the public doesn't particularly trust it. And that seems to be getting worse as we speak into April now. People are starting to do things. And I'm just going to mention one thing that we heard about late last week, just as an example in the context of particularly those of you on a CDFP journey thinking about your CIDM, digital money experience. So in Mexico, as you've heard, not a lot of scope for fiscal stimulus, but last week, some of the delegaciones, the kind of units which are units of Mexico City, that's a vast city, 20 million people, something like that. So a delegación is basically a sub-city, but might have millions of people in it. And so last week, several delegaciones apparently started to issue their own currency in the form of vouchers that look very much like, in fact, I can get a picture and show you, they look very much like Mexican currency, the way they're printed, but they're not. They're meant to be vouchers, which they're issuing to people in the delegación so they can go and get food, right? Now, how credible is that? Well, the food stores have to be willing to accept them. They're paper, which of course led to some howls of derision in Mexico. So in the midst of an infectious disease crisis, you're issuing paper vouchers that people have to touch and hold and pass and so on. That's crazy. But of course, as you saw, the proportion of Mexicans who have access to a real-time payment system is already a minority. And so accelerating to a digital version of that just wasn't feasible. So there's an example of not a national level response, it's a local level response where there might be more cohesion and therefore more acceptance of things like vouchers, which enable people to buy food and to provide certain forms of essential service. And it's in stories like that that I'm fascinated to hear more and to track, because I think that may be some of the most interesting things to emerge from this crisis. So there you have it, the three messages I put up at the beginning about the macro scenarios. Don't count on bounce back. Don't rule it out either. Just ask under what circumstances in your context is it plausible. The second one, think about the vulnerability. It's differentiated. It's not one size fits all. So who is most vulnerable and who is most essential to restarting the economic recovery in a country? And then finally, to the financial institution level. So once you've identified that recovery room group, engine room group, who are the financial institutions who touch that group and how can they assist in supporting an inclusive economic recovery? So with that, and with a gracias from the Mexican team involved, more than from me, I'm going to pause that, Sarah, and I'm going to hand back to you and stop sharing my screen.
Thanks, David. That was a really fascinating session. I must admit, I didn't 100% quite understand how the how the scenario thingy sort of would work, but actually seeing how you've put it all together, I suddenly start to understand all those, relationships between all the different factors much clearer than I did before. So thank you very much for that.
You're welcome.
And I can see that we've got a lot of questions coming in. So let's try and get through as many as we can while we've got everyone on the line. So firstly from Fahad, and I think probably what he says is what a lot of people I think are saying, that actually listening and hearing to what's happening in Mexico, it does sound familiar to quite a lot of us. I know here in South Africa, I could also, feel some of those similarities. So his question is, what can the government do along the lines of digital, financial and service providers? What can they do? So is e-commerce a potential answer, for example, here?
Yeah, well, so Sarah, Fahad, are we able to hear Fahad as well? I'd love to also hear more about, Fahad, what you're experiencing in Pakistan, because I think you're right about there are some archetypal similarities. And I was actually seeing in Pakistan that, for example, in terms of social cohesion, that there have been challenges to government authority in the lockdown going on. And so maybe you can actually talk to that, and then we could discuss your question. Is that possible, Sarah? For Fahad?
I've unmuted I put Fahad into the panel, so hopefully he can speak. Fahad, maybe you can you hear us?
Yes, Sarah, thank you so much. Thank you, David. Can you hear my voice?
Yes.
Yes.
So thank you for the session, and just summarizing about Pakistan, that Pakistan has the section you have mentioned, the middle class section, which is normally using cash for their income, has informal contracts with different shops, are really suffering in Pakistan because they are not able to, they are in their home and are not allowed by the government to go for work. Also, the industries and factories are closed, and a unique situation has happened in Pakistan, that the central government, the federal government, which is led by the Prime Minister Imran Khan, is more, open to economic view of opening the market with a minimum SOP. While the city in Karachi, especially, which is the hub of economic activity where I live, here the provincial government has, really, they are following the advice of WHO in a very strict manner. So even people sitting, a family member sitting in a motorbike, 2 people are not allowed. So they are really, there is a discrepancy in terms of implementation of the law as well. However, it's difficult to, people are making a trade-off between the challenges of death due to COVID-19 or death of their family members, or poverty due to economic reason. And in my case, let me tell you that the economic reasons are far more challenging. And the people are, especially with a very bad health infrastructure, they don't have any option as well. So I think there are lots of similarities with Mexico. However, things are very complex here, and we are coping with it. Myself is working with NIFT, which is the National Clearing House. So I have to go to office as we are part of essential service. So banks are open, the clearing house is open, and we are working on the domestic payment gateway, so to facilitate it. And we had a session within Pakistan under DFI alumni on how to provide solutions to the overall people, especially the SMEs. So we are working closely with telcos, which are part of our community as well. Few people who have done the CIDM course. So we have proposed a recommendation especially on merchant onboarding of the big outlets where people used to gather, and social distancing principles were not followed. So I have, forwarded that report to not only to DFI alumni as well as the State Bank of Pakistan. So we are working on those lines, and I think the month of Ramadan is starting in Pakistan and globally in after 2 days. E-commerce has been, okay, has been approved, and things will slowly come to normal. It's like a limp bag approach, as you say, because the industries are not open, so the bounce back is not possible, as I see. Thank you so much.
Thank you for sharing, Fahad.
Sarika, may I pick up on one thing in Fahad's question, which I see others may have an interest in? So Fahad, as you said, I think it's more or less an obvious thing for all of us that one of the things this crisis does is to accelerate digitization, right? That's the obvious thing. I think the non-obvious is to say, so what do we really mean by that, and how might it be differentiated, right? So let me just use an example out of Mexico to illustrate that. So there's a good reason why a lot of Mexico's Q3, who by the way are not so much middle class, these are aspiring middle class, it's low and moderate income people. The income levels are quite low there still, but there's a reason why they've stayed informal, right? It's to stay off the radar of everything from tax authorities to licensing authorities and so on, who they see as being predatory and where there just isn't a value proposition for them to get involved in that. Now, all of a sudden, there might be a value proposition to digitize faster, for merchants to accept digital payments, because if they don't, they'll die. And so for cooperatives in Mexico, who like cooperatives in many places have been quite slow to digitize, right? It's not easy. It's a whole transformation of a business model. Certainly the ones that we see there are accelerating their digitization. Now that brings risk, right? Because any of you who work in banks, Fahad, you work in a national switch type environment. If you accelerate a digital transformation, well, sometimes the wheels come off, right? You people forget things. They forget the type of cybersecurity protocols, and there is already a spike in cyber incidents happening. On the client side, though, Co-op client side, we see a lot lower barriers to people wanting to onboard. And I've seen a question already in the question and answer, I think from Brian Richardson, asking about onboarding and are there ways in which it might become easier as a result? You know, Brian, I think it will, right? So I think the most interesting thing to me about what digitization acceleration does is it's resetting the boundaries of formality and informality. So formality will no longer be a binary issue about does the government give you a license or are you registered for tax? It's going to be, do you have access to digital platforms on which you can sell your stuff? That'll be far more important, and objections that people in the informal sector might have had before would be removed on the one hand, and on the official side, I think there'll be a lot less resistance to allowing, encouraging, supporting remote onboarding forms of eKYC as it's known in India and elsewhere. But of course, that's dependent on an infrastructure that supports it. It's dependent on a digital ID infrastructure in many cases to do this in a reasonable way. And that's why some of the elements of a fallback type world are a world in which that infrastructure isn't easily available, and there isn't the luxury of a lot of time to roll it out. And it's difficult to roll out major new infrastructure at a time of crisis. Mexico has an instant digital payment scheme called CODI, but it just hasn't really been rolled out yet. And so Mexico is in a very different position from, say, Kenya or from China, where already, you know, widespread instant digital payments were available starting out in the crisis.
Just one point.
Fahad,
Just one point.
Your question in the Q&A box, so we can come back to it. Otherwise, we're going to get stuck on Pakistan for the whole of the rest of the session. Is that okay, Fahad? Thank you. Because what I wanted to say there is where you were before you start has an impact on where you're going to go afterwards. So that makes a big difference between whether you're looking at what you're looking at in terms of the countries. So one country is not going to experience exactly the same as the other because of what existed pre the pandemic.
Absolutely. And so I take it one step further, because I also see some people asking questions about Africa. So, I mean, just the answer to that question is we are developing scenarios, in fact, for Kenya as we speak, and then I believe shortly Uganda and Nigeria. And while some of the archetypical stuff may be similar, there are big differences. And in Kenya, what we're looking at, or the team working on that is looking at, is how even across livelihood types, your scenario differs, right? There are certain livelihoods which are more susceptible to a bounce back. There are other livelihoods which frankly are in fallback mode right now. So if you're let me just use an example I heard in Kenya this week in a conversation. If you're an event organizer, right, in Kenya, you're not looking so good in terms of bounce back, right? That's not likely to be there. You're more in a fallback type of world for that business where you might have to start side hustles to restore your livelihood, something else, even if you hope you'll be able to do it. Whereas if you're in the business of food supply, guess what? That's essential, right? The issue is going to be under what terms and what food and how do you stock it, and will the value chains work? And that's a complex, and we could talk a lot about that, but let's not do that now.
And I really enjoyed Natalie's question, which comes a little bit back to the role of the co-ops, but do we think that we're going to see more partnerships? It's like the co-ops, if they can't digitize by themselves, should they partner with MNOs or banks who've already got those rails in existence?
Yeah, I think it's a great question, Natalie. I think, though, that the partnerships we're more likely to see, it could be with banks, right? But there's always this kind of difficult dance that seems to go on between banks and cooperatives, right? There's different DNA involved. So I think the partnerships that we'll see, and actually was a key part of the Mexican scenarios under the message 3 that I didn't get to talk about, actually is partnerships with fintech companies. All right. So these are companies that are happy to come alongside providing infrastructure in a box or whatever, accelerating forms of digital transition in more than just a supplier role, because cooperatives may need that. But they also are not wanting to change the whole DNA. They're not looking to take co-ops clients away in ways that co-ops might be concerned about banks getting too close. They might think, well, they just want to steal our clients. So what we're talking about in Mexico, Natalie, are neo-co-ops, right? You've heard the term neo-banks, right? So the UK has a whole lot of neo-banks, which are new types of banks that exist without branches, right? They're still banks in their fundamental regulatory structure and in their operations and so on, but they are new era banks with different cost structures and different channels, different capillarity. And in Mexico, it's quite possible that even as we see traditional co-ops suffer, especially under fallback type worlds, we will see the rise of neo-co-ops, which are sort of wiring up cooperative style governance with fintech type agility. And I think it's in that space that there already are some interesting things starting to happen. I think we'll see a lot more.
That's really interesting. I never thought about fintechs being a partner, but actually you're right. There's the competition for the customer is not there, which is something that's always been very difficult when you're looking at collaborating with another organization. Jennifer's asked, are there others in the financial sector beside co-ops who could play a key role in mitigating the recovery?
Others in the financial sector, Jennifer, wow. So again, let's just use Mexico as our example today, but to see if we can go beyond that. So Mexico has a microfinance sector, like many countries do, that is not necessarily deposit taking. Some have become banks. Compartamos is the famous one in Mexico that is a bank, Banco Compartamos. So it is able to take deposits while it has a micro lending kind of business model attached to it. Now, for the microfinance institutions that are not deposit taking, they obviously face very different issues in terms of funding. They look more like, say, digital lenders in Kenya look right now, where my understanding is that digital lending in Kenya today, the taps have been turned off. Not only because of people obviously not repaying their loans under moratoriums that exist and lifting the Credit Reference Bureau recording of payment records right now, but because these lenders are saying we don't have the funding to support new rounds of lending, and the enforceability of new lending is anyway questionable. So that's simply a shorthand way of saying, Jennifer, I guess MFI is uncertain, frankly, how they'll come out. I think they face as much pressure as co-ops, if not more pressure. And I think the key point here is for regulators, or rather central banks, as they triage what is now becoming a financial crisis in countries like Mexico, right? It's moving from a real sector shock to a financial system shock. as they triage, they usually triage by size. You know, the big banks get the support because that's the easiest to prop up and support. Our plea in Mexico and our message and the whole point of these scenarios has become making the case to say, as you triage, we know you have to triage, but if you want an inclusive recovery, please think about entities like co-ops, because they might be more important than you think. They're only 10% of the financial system. That's kind of a rounding error if you're in triage mode. But if you lose them, you will lose the engine room of that inclusive recovery. So I'm hoping we'll see more of that. You know, fintechs, we've already touched on. I think we'll see more activity of fintechs with agile models coming to the fore. The ones that interest me, though, Sarah, the most, I think, are actually at the moment, and this is actually more coming out of Kenya, but also Mexico, are the aggregators and the goods suppliers in value chains, right? The wholesalers, because they have the ability to extend credit in ways that they used to some extent. Now, if they don't receive enhanced support from their banks or from governments directly, they will stop doing that. And in Mexico, we have access to an ongoing survey data of thousands of Mexican shopkeepers. And the evidence already is that the informal credit is being pulled. People are just not doing it because they can't afford to do that. And so that freezes the whole chain. That's the customer side. If the wholesalers freeze the credit of the small shops, the tiendas in Mexico, then they have no stock, right? And the whole value chain, even around food as an essential item, freezes. So I would say, if you're talking about who can play a role, I would be looking at those large wholesaler distributors in Mexico. There are a few very large ones. They're big businesses. And that's where the social cohesion thing comes in. You know, there's always a political economy. In Mexico, it's a very sharp discourse around how the private sector is seen by government, and government's unwilling to be seen to support private sector too far. And that affects private sector being willing to step up to the plate voluntarily. So we'll see how it plays out in Mexico, but those are the sorts of groups I would be interested to look more at in terms of their role in the crisis and the recovery.
Thank you, David. And Raphael actually brings up a similar question to that. So he's from Papua New Guinea, and they have a stimulus package coming from borrowing and from donors. But the package is seen as being biased towards public servants and not towards the private sector and informal sector. So is that sort of similar to what you've been describing, and that this might not be a great way of going about using the money?
Yeah, Raphael. So I think the problem with stimulus packages, even when government has the ability to do it, so I'm glad to hear Papua New Guinea, you have that headroom, it's going to go to the people government can touch. Right? And so that's people with tax IDs. So here in the US, where there's a massive stimulus package, you know, more than 10% of GDP, they're about to increase it by another 5% if Congress passes the new measures this week. It's going to, guess who? You know, taxpayers who are on the rolls, who can get those checks or transfers. In this country, it's still checks, unfortunately. So, you know, your question there, what would I say on that? I would say it would be very unfortunate if the stimulus simply puts money in civil servants' pockets, right? Because they are not going to be the engine room of Papua New Guinea's economic recovery, right? They may be essential to services like teaching and nursing. So by all means, keep the lights on. But think about how to reach those informal players. And in Papua New Guinea, it's been years since I've been in your country, but you'd have to look at what are the equivalent of the co-ops in Papua New Guinea that allow forms of lending to get to that group.
Thank you, David. And I'm just going through some of the questions because we've had quite a few new ones come in just to see where we can go next. So we've got a couple asking around the role of the regulator. We talked about things like, you know, making EKYC, maybe changing the regulations to allow people to register for some form of digitized account. What are your other thoughts about what the role of regulators may be?
Yeah, so I think it's an interesting question, Sarah. And again, one has to separate, like one has to throughout. And one of the points of the scenarios was to separate this between the kind of crisis phase, or as we called it, the response phase, when everyone's scrabbling to do stuff, from a recovery phase, right? So regulators in the response phase are showing forbearance, right? How you classify bad debts and how you report. They may waive or relax rules on opening accounts and things like that in the response phase. In the recovery phase, I'm more interested about how this may accelerate the uptake of certain soup tech type measures. So particularly if you're thinking there's tons of stimulus money in some countries being poured in, whether by the central bank or whatever, into entities, there's going to be a need for more transparency and oversight than ever before. And frankly, in most countries, the levels of that are poor. A lot of reporting that's done by financial institutions is a month delayed, not always very accurate, and so on. And that's where I would like to see in the recovery phase, let's be clear, we're not in that, but getting there, much faster adaptation and acceptance and promotion of supervision technology, soup tech type tools that allow for even real-time reporting, that allow for regulators to get much greater insight into what's going on so that they can be monitoring what goes on. Because otherwise, frankly, in some of these worlds, a lot of that money will end up where it shouldn't be. It'll end up in fraud and corruption and other things when it's made available. And that does not assist an inclusive recovery. The honest, hardworking people who make up the base of that Q3 type group, wherever they are in the world, they will not get it. They will not be benefited.
I think the word inclusive is so important when you're looking at the recovery. The way in which you could do for some parts of the economy are different from other parts. So yeah, it's making sure that you are reaching those who actually need the support and help as well. We've got a nice question or a nice statement, really, I suppose, from Michael, who is urging you to do scenarios in Malawi at the moment. So I think there's some political challenges, nurses on strike, and some real difficulties happening in Malawi. So if you've got space, David, maybe Malawi is one that you can add on to your list along with Kenya and Uganda.
Well, sir, if I may just say this quickly. So I don't think it's about my list, Michael, I think it's about your list, right? So part of what we're doing in Africa is working with FSDs there. At the moment, Kenya, as I said, Uganda, I think Nigeria. But it's to provide some of the tools through which you can build your own, because there are these archetypical similarities. There are some things that structurally you can look for. So, I mean, I would love to see CDFP students and graduates, Sarah, actually, using the scenario logic. There's no magic to it. So I hope even the high-speed introduction I gave today makes it clear, demystifies, there's no magic. It's just about a disciplined structure of thinking about complexity. So Michael, I'd hope that in Malawi, perhaps you could apply some of that and make it useful in the case of the tough decisions. I mean, Malawi obviously is in a tough situation, and I sure hope the health layer doesn't get as bad in Malawi as it is getting in Mexico, right? That would be really bad. So let's all hope and pray for that.
And yeah, I think that's a great idea, David. Maybe we can have scenario planning being one of the focus of one of our alumni community of practice meetings, which we're also running online now because we're not allowed to meet face to face, but perhaps we can help Michael and Chiku, who's the lead there, do their own scenario planning in Malawi. So I'll get in touch with you, Michael, afterwards. Right, let's move on. Let's have a look at one or two of the others. So we've got a question from Sawer Akhtar, who is asking, due to unemployment and low production, poorer countries might face social anarchy during or post COVID-19. And I know we have our own issues. So we've already had some rioting starting in South Africa. What can stimulus do to sort of challenge or change this? How can we change some of those things that are happening?
Yeah, so that's very unfortunate. I mean, what you're observing there, this is why I stressed that social cohesion element, is that the longer this goes on and the more uncertainty there is, the more likelihood that that will be the case. I mean, you've probably heard here in the US, there were protests over the weekend in certain states. I don't think they turned violent, at least as far as I heard, but these were people protesting against the restrictions, right? Because they want to get back to work and things like that. So the longer it goes on, the more likely this is. Can stimulus change it? Frankly, I doubt it, because I think some of the people at most risk of starvation and hunger, which is what will cause the rioting, are not people within reach of traditional stimulus. This is where non-traditional food banks and things might be necessary. And I know there's been an amazing voluntaristic response. I follow South Africa more closely than other countries. I also follow Massachusetts, where I live, and amazing response from civil society, filling gaps from food banks that have closed or school feeding schemes that are not working anymore. that takes the edge off some of those protests, but it doesn't stop it. And so I go back to the real point, Sarah, and maybe on this, I'm afraid I need to end because I, like everyone, I'm jumping on continuous calls, as we all are these days. We're Zoom fried, as I say,
Yes.
these days. But just to say, I think the issue is about people having credible expectations that this can be managed and it will end. That comes by having realistic expectations, not false ones, like it'll all be okay next month. That's a false expectation for most places. And so obviously people who believe that will not be happy next month. They will protest and do other things, and they probably should. But developing a real set of expectations around what recovery looks like, about how it needs to be inclusive, not just about big business restarting or just about digital platforms taking over the world or whatever. It has to be a message beyond that. And if governments can keep to that message and be credible about it, there's more hope, I think, that we could avoid the situation Sawara is referring to, which is the kind of fallback world where things do decay and it takes a long time. I mean, Mexico risks setting back its financial inclusion 20 years. That's the fallback scenario. It's a 20-year reset of the progress that's been made around financial inclusion there. That's not a happy option, but it's a possibility.
Thank you so much, David. I've really enjoyed today's session and discussing all the different options and ways in which we can try and facilitate more of a bounce back than the negative situation you just described. So let's hope that with the new knowledge that we have, we can do some scenario planning in all of our different countries, maybe share them with each other at a future session, hopefully. And yeah, managing those expectations. I think nobody really knows what's going to happen, but at least this way, talking through some scenarios gives options for positive actions that can be taken and move things forward. So thank you, David. Thank you, everyone who joined us today and for all of the questions. There were so many, and I know we didn't get around to all of them, but I hope you've all had an enjoyable session this afternoon. And we look forward to seeing you on future webinars.
Great.
Thanks, everybody.
Thanks, Sarah. Have a good day, everyone. Bye-bye.
Bye-bye.